Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the endless stream of corporate documents that come across our desks. And let me tell you, Red Rock Resorts Inc. has just dropped its annual report for 2025, and it is a thick one packed with numbers, strategies, and a whole lot of risk factors that could keep you up at night. So buckle up because we are diving deep into what Red Rock Resorts Inc. is telling us about its performance and what it means for the company and its investors. First off, Red Rock Resorts Inc. is talking about its business strategy, which sounds pretty straightforward. They want to attract and keep customers, mostly people who live around Las Vegas, but also a good chunk of visitors from out of town. They are all about offering the latest slot machine technology, great amenities like hotels and restaurants, and a really good time. Now let's get to the financials. Looking at the balance sheet for the 31st of December 2025, we see total assets at over $4.1 billion. That is a substantial amount of resources. In terms of revenue for 2025, they pulled in over $2 billion, up about 3.7% from 2024. That sounds pretty good on the surface, but it does not tell the whole story when you look at the other numbers. Their casino revenues specifically were up 5% to about $1.34 billion. That is their bread and butter. But then you see room revenues took a hit, falling by 5.2% to $190 million. They say this was mainly due to hotel renovations at one of their properties. What is interesting is the non-controlling interest in Station Holdco. It is over 41%. This basically means a significant chunk of the profits from their main operations go to someone else. This is because they own all the voting stock but not all the economic interest in their subsidiary Station LLC. They have about 59% of the economic interest in Station Holdco. Operating income for 2025 was around $597 million, up from $568 million in 2024, a 5.1% increase. This is solid growth from their core operations. But then we look at interest expense net. It decreased by 11.8% to $201 million. This is good news. It seems they managed their debt cost better than before. Now, for a key performance indicator adjusted EBITDA, it came in at about $848 million in 2025, up from $795 million in 2024. That is a healthy 6.7% increase. This measure strips out things like interest, taxes, and depreciation, giving a clearer picture of their operational cash flow. And finally, net income attributable to Red Rock Resorts Inc. was $188 million in 2025. That is up from $154 million in 2024, a jump of 22.1%. This is after accounting for that non-controlling interest. So while revenue growth was modest, profit growth was quite strong. Looking at the statement of stockholders' equity, we see a lot of activity. For example, under stock option exercises, there was an increase by 1055 shares. This means employees are buying in. They also repurchased over 880,000 shares of their stock in the last quarter of 2025. This usually signals that management thinks the stock is a good buy. Speaking of employees, their equity incentive plan is quite active. Options granted in 2025 had a weighted average fair value of over $52. Now for the risks, oh boy are there risks. Red Rock Resorts Inc. is really concentrated in the Las Vegas market. That means if Las Vegas sneezes, they catch a cold. They are highly dependent on local customers and tourists. Economic downturns, inflation, higher interest rates, and even changes in consumer spending habits can really hurt them. They are also facing fierce competition from other casinos and even smaller gaming spots all over Las Vegas. Plus, the expansion of online gaming and sports betting across the country means more competition overall. If competitors upgrade their properties or offer better deals, Red Rock Resorts Inc. could lose market share. Another big risk is union activity. Employees at some of their properties are trying to organize, and this could lead to labor disputes, work stoppages, and higher labor costs. They are already dealing with some of this. And then there is debt. They have a massive amount of it, over $3.4 billion as of December 2025. This means a huge portion of their cash flow goes to paying interest and principal. It limits their flexibility and makes them more vulnerable to economic shocks. Because Red Rock Resorts Inc. is essentially a holding company for Station Holdco. And Station LLC, it is totally dependent on those subsidiaries for cash to pay its bills, including things like tax benefits and dividends. And who is in charge? Well, the Fertitta family entities control over 90% of the voting power. This means they really call the shots. While this can provide stable leadership, it also means minority shareholders have very little say. Their interests might not always align with everyone else's. So what is the story here? Red Rock Resorts Inc. seems to be navigating a competitive landscape and a challenging economy pretty well. They are growing their profits and managing their debt costs, which is a good sign. The expansion of their Durango property and their focus on customer loyalty are clear strategies. However, their heavy reliance on Las Vegas, their substantial debt, and the ongoing union discussions represent significant risks. The strong net income growth is impressive, and their adjusted EBITDA shows solid operational performance. The fact that they are buying back stock is also a positive indicator. But that massive debt load is a persistent concern. It means they have less room to maneuver if things go south. The concentration of voting power with the Fertitta family is also something to keep in mind for any investor. Overall, Red Rock Resorts Inc. is a well-established player in a very specific market. They are executing their strategy effectively, but they are also exposed to considerable risks that could impact them significantly. It is a company to watch closely, especially how they handle their debt and the competitive pressures in Las Vegas. Now, what is your take on Red Rock Resorts Inc.'s financial health and their future prospects? Do those risks outweigh the growth potential? Let us know your thoughts in the comments below. If you found this breakdown helpful, do not forget to like this video and subscribe to Corporate Decoder for more deep dives into the financial world. Also, join our Discord community, linked in the description to keep the conversation going. Thanks for watching. See you next time.